Good evening, everyone. It is October 13th, 2022. We just had CPI, and I believe one of the top three or top four biggest intraday moves in the S&P ever. So we're going to start off actually with a really big view. Even though this is just a plan for tomorrow's intraday trading, I think it's important to start with a really large view, and then we can go in from there. So upon the CPI print, this is our monthly view, and I was looking for a tag of 34, 34.50, and we got close, but I think we still have some time to tag that, perhaps next week. We did end up tagging this almost the COVID low to all-time high halfback at 96.50. We almost tagged it, came a little bit short, held that 3,500 area. We're still very far away from getting any sort of bullish momentum on higher time frames. We would need to get to the top of this balance, and so far we're not even at the bottom of this balance I'm discussing. We're not even at the bottom of it, this 37.40 area. Perhaps we make a run tomorrow and close the gap at 50 and get back into this balance area. That would start to get interesting. However, for now we're not there just yet. Moving on to the weekly plan. This is a 15-minute chart. We had the lows coming in here. Again, this was made on the weekend, and we held the lows a number of times, and upon the print, we fell down. Let's go ahead and throw on the external trading hours. Ramped up to this level, shot through that like nothing, shot through that like nothing. Eventually, we found a bid right around that 12 quarter level that I had, and we moved up, could not sell off, held the bid around that 42 area. There's a weekly low at 42 quarter, another one at 48.75. So we held this area, moved back inside the week's range, and from there the price action got very, very, very aggressive. I was able to catch a short at 87 quarter, which was a win. I did get a little bit of a loss at 77s, so I did end up with one win, one loss. However, once we got back inside the week's range, the price action and the tape started to look. It's rare I call something untradeable, but I believe that would be considered untradeable. And we ended up ripping the highs, we ripped the open, and we moved up to new highs of the day. And currently on Globex, we're making new highs of the week as well. In RTH made new highs of the week, and in Globex currently. So now let's move on to our daily plan here. You can see here is the FOMC spike high at 44 half. That happened, I believe, was it the minute before? There we go. A couple minutes before it got released, we had that run up right to 44.75, and then the sell off. If you were really using spike rules, you'd probably have 27 as your number of interest. However, I'll be going with 44 quarter just because it's 44.75, just because it looked like such a potent level intraday, even afterwards. You can't see it on the 1 minute chart, but it did offer a sell-off within a 2.5 point stop. It did offer bids and another sell here. Again, you can't see it on the 1 minute chart just because how rapidly trade was occurring. But this will be the pivot for us. The thought being, there are a variety of ways to measure momentum on a day like this, and I'll keep the external trading hours on here. You could consider momentum being falling back inside the the CPI spike high at 44s. You could consider it falling inside of settlement highs at 20.75. You could call it falling outside of last week's low at 17, or below the weekly pocket 08, or the halfback on the week now, the RTH halfback at 3,600. There's a variety of ways of measuring momentum for the week, and they all sort of fall inside of this kind of 87 to 44-ish area. Let's call it 87 to 50. You can split it however you want it, but the idea is that I think we're going to have some choppy trade in here, or maybe better put is indecisive trade in that 35.90 to 36.40 area. This sort of area. I think this will just be an indecisive, difficult area for trade. So instead of trying to trade that, what I will be doing is I'll be looking for a long at that spike high and a short as well. If I get them, that's great. I I understand that this is where we had some initiative buying come in, which caused the short covering, the aggressive short covering. However, like I mentioned, you are below the weekly POC. You are below the weekly halfback and the FOMC or the CPI high. Sorry, you're below all those measures of momentum. And although there might be some short covering bids here, as I'm sure people got trapped around this 87 area, and that's been a critical level all week. And going back to September, that is the September high of the month from 2020. Although this is an area of interest in general, I think it'd be safer to let it sell off, take a short for the rejection of re-entry into the week's range from pre-CPI. That would also be a short off of settlement lows. And same thing here at the 56.75. This was just a great level. We got a great sell off of it, and that is where we eventually had our buying take place, which led to this pump up into settlement lows and then up higher. 33 quarter as well is where, if you look on a 1 minute chart, it's hard to see here, but 33 quarter is where we caught our initial bid off of that print. That area being an area of interest, you can think of these as sort of spike bases, which are typically derived from a 30-minute chart. However, when trade is happening so rapidly, when we sell off, from 36.33 from 36.44, when you sorry 35.33, when you sell off 110 points in a minute, a 1 minute chart may be of interest. It offered a sell immediately after, another small sell, a bid. So in general, it's an area of interest. I'm aware of 40 as well. It is a dark line here. These are just small areas of interest that are difficult to see on purpose. I don't like them crowding the chart, but they may be used in the future. This 35.40, 35.62 half, where we made a high the day initially, had a couple sells. But I will be looking to short this 36.56.75. In other words, letting the short covers occur here, and then the short cover bids occur, let it fall through, hit the short at 56.75. Same thing with 33 quarter. Same thing with 10 quarter. 10 quarter being the this base here. We had a large spike, and it's difficult to tell here, but this is where we were trading around. Let's see if I can bring it back here. Again, trade was very rapid, but you can see after the open, 10 quarter offering a sell, another sell here. Again, quite difficult to look at. '06 is also an area of interest. '06 where we caught the bid, again a large bid. So I will be looking to short 10 quarter in the event that we get it. Now below there, I have 34.96 half. Again, that being the COVID low to the all-time high, just the middle of that range. Nothing else, so that will be an area of interest. However, I likely will not be trading it. So this is about as concise as I can make a 200-point daily range. I've got it down to whatever it is, 1, 2, 3, 4, 5, 6, 7 levels. Now, above, we do have the gap going into 3650.75. I will not be trading it. These levels you can ignore. These are simply levels I may be looking at in the future. However, I don't have an interest in trading it here. I think there's definitely a chance it does sell off of this gap close, the range gap close. However, after running up 3,500 to just about 3,700 in the RTH, and then if we do end up gapping above and into another gap, I don't have an interest in shorting it. I have no problem catching tops. I shorted 37.09, I believe, on that Monday, 09.75, I think it was. I have no problem shorting tops when the structure makes sense. However, I struggle to see the justification to do it in this scenario. So, hope that makes sense. There may be some adjustments to these levels based off the overnight session here, but this should be in general how I'll be looking to trade. How I'll be looking to trade this, 200 or so point range. Hope that helps. If there are any adjustments to levels, they will be posted to Twitter pre-market, of course. Other than that, I've got nothing for you guys. Trade small and trade safe.